Today, let's get your Nvidia stock news fix for April 11, 2024. You either have, or you're thinking about Nvidia stock. So information like this helps you to better manage your investments. We use only premium news wire services, and recent publicly available information. We'll group our news into 3 categories: macro, bearish, and bullish news. Check back often at our channel for more news summaries on your favorite stocks. If this sounds good to you, then please like and subscribe. It costs you nothing, but to us, it means everything. Without your support, we cannot make more videos. Also, check out our best stock trading guide links below to help you make even more money. Open your Robinhood account today using our QR or link below, and earn a free gift stock. So, let's get right to it. Number 1. Nvidia Macro News. Nvidia stock is roughly up 230% year-to-date versus the S&P 500, which is up only 26%. This makes Nvidia one of the hottest stocks in 2024, and we can see why so many investors are interested in it. By making graphics processor units, GPUs, that power AI's programs, Nvidia leads the artificial intelligence narrative. Stocks rebounded noon, NYC time. Nasdaq was up 1.2% powered by the semiconductor industry, led by Nvidia's 3% gain. But recently, Nvidia is 10% off from its recent all-time high of $950 on March 25. Investors and traders are worried if Nvidia can keep up its incredible pace. Especially now, because on Wednesday, the Consumer Price Index, CPI, reported 3.5%. This was more than what Wall Street forecasted, and thus put downward pressure on stocks. Soon after CPI's report, the Dow Jones Industrial Average fell by more than 400 points. Yields on bonds rose because investors believe future interest rate cuts will be delayed, diminished, or both. Will fewer or smaller interest rate cuts affect Nvidia's growth? Nvidia has already gained stellar returns year to date, and this was through a period of high interest rates. Although interest rates do indeed affect tech stocks, Nvidia has shown to be a market leader, even amid high rates. Number 2. Nvidia bearish news. More companies have reported that they are working on designing their own chips and hardware to compete with Nvidia's products. These companies include Alphabet, Meta, Microsoft, Amazon, and Intel. For example, on Tuesday, Alphabet discussed more news on its competing TPU-v5P chip for AI. Originally previewed in December, it can process large language models 3 times faster than its predecessor, TPU-v4. Large language models power artificial intelligence chatbots like ChatGPT. In another example, Intel said its new hardware is way ahead of Nvidia. Intel claimed its Gaudi 3 to be 50% faster at processing large language models, and 30% faster inferencing than Nvidia's H200 chip. Inferencing is the ability to predict based on supplied data. Keep in mind, however, Intel has not yet compared it to Nvidia's new Blackwell chip announced at the GTC conference. Experts like Jim Cramer expresses confidence that Nvidia will continue with success despite its new competitors. Data center accounts for 80% of Nvidia revenues, and within this business unit, Nvidia has partnered with other major companies to solve business problems using AI. Nvidia's data center offers services ranging from language modeling, to cloud computing, to advanced medical research, and more. So, for Nvidia's CEO Jensen Huang, nothing has changed, even with new competitors. In fact, Nvidia's data center partnerships continue the profitable work with some of their biggest chip competitors. Applications in artificial intelligence, it seems, is so big that it doesn't make sense for Nvidia to obstruct or monopolize the industry. Furthermore, Huang is well aware that demand for artificial intelligence chips is so high that new competitors can't be stopped. When you have innovation, and the market forces of demand and supply, competition is inevitable. But even with competition, analysts estimate Nvidia will continue to dominate, with 75% control of the $90 billion chip market in AI. For our last bearish news item, ARK Invest CEO Cathie Wood in her latest round, sells $2.5 million of Nvidia shares at $906. She has sold nearly $5 million of Nvidia this past year. Nvidia has become a check-the-box stock, and that expectations could be getting ahead of themselves, said Wood. Check the box means Nvidia is a stock you must have as an investment manager, or else you will miss out. She cites too much hyperactivity around Nvidia, and that an inventory correction will happen. Number 3. Nvidia bullish news. Let's first look at social signals. Reddit groups are still hot about Nvidia. Reddit represents the face of retail trade, is responsible for the resurgence among meme stocks like GameStop and AMC. Many influential voices continued to recommend Nvidia for its continued dominance in its industry. According to one estimate, Nvidia represents over 80% of all social media mentions relating to stock trading in the month of March. In world news, Micron announced Thursday that the April 3 earthquake in Taiwan will reduce its dynamic random access memory (DRAM) supply for the next quarter by about 4 to 5%. These chips are used in Nvidia's H200 GPUs for applications in AI, and are in heavy demand. This can mean increased prices, demand, or both, pushing the stock higher. Demand is so high that Nvidia margins now are at an incredible 70%, and the company commands 97% of the data center market in GPUs. In product news, Nvidia announces RTX 5090 and 5080 will be available to buy in Q4 2024. So we can expect further sustained Nvidia excitement in 2024. Next, let's see what 4 professional Wall Street analysts say. Bloomberg analysts showcased 10 artificial intelligence-themed stocks, including Nvidia. 9 of them were trading above their 5-year price-to-earnings average. But Nvidia was 13% below. This means that on a relative basis, Nvidia still has more upside left. Raymond James analysts maintained a strong buy and raised its price target from $850 to $1,100. Expect revenue to sustain well into 2025 given Blackwell, and exponential growth in AI's model complexity, said Raymond James. But what do analysts say about Nvidia's recent 10% slide from its all-time high? Is Nvidia no longer the hot artificial intelligence stock we thought it was? CFRA analysts called the decline reasonable in nature, given Nvidia shares have led the rally in AI. They reaffirm their belief in Nvidia's long-term growth trajectory. Finally, Wedbush analysts warn, investing in popular tech stocks isn't an activity for the meek. Nvidia is much more so for the fact that AI's frontier is uncharted territory, said Wedbush analysts. So there's more variability to performance versus industries where we have a history of cycles, said Wedbush analyst Matt Bryson. In conclusion, Consumer Price Index revealed this week that inflation is stubborn, and that may have caused Nvidia to take a breather. But we are still early in the artificial intelligence story, and Nvidia remains the leader. Despite bearish signals, Nvidia still looks like a strong long-term hold. If you own Nvidia stock, you can hold. It may not be advisable to keep adding to your position here. If you don't own Nvidia stock, you can wait for a dip to get in. Nvidia remains a long-term hold to $1,000 in price and beyond, as many Wall Street analysts rate. That's it. That's your Nvidia stock news fix for April 11, 2024. In future videos, we'll explore more topics related to other elite stocks, and anything else you want to comment about. At our channel, Stocks, Finance and Trading, it's all about how to make, or save more money. Don't forget to check out our best stock trading guide links below to help you make even more money. And don't forget about Robinhood's free gift stock. Robinhood allows fractional share purchasing, making it great for beginners. If you liked today's informative video, please like, subscribe, and comment. It motivates us to make more videos like this. What other topics and stocks would you like us to cover in our next video? Comment your ideas below. Turn on notifications for our videos because we may have market timing advice to help you make money. Past performance should not be used to predict future gains, and diversification is essential in any investment strategy. Please consult with professionals for any tax strategy, and before investing in securities. All used logos, trademarks, and screenshots are properties of their respective owners. Happy investing, and we'll see you in our next video.